Excellent. We are alive. Let's bring up the chart. Welcome for those who are in here. Let me know if you can hear me all right. For those who are watching the recording, you can skip about 3-4 minutes ahead. Just gonna wait for people to come in. For those who are in here, let me know if you can hear me. Sweet. Robert, you can get in the Discord if you want to talk. This is just for people who aren't in the Discord, but whichever way you want to go works out. The YouTube is, I think, like a 3-second delay too. So if you can be in the Discord, definitely jump in here. The link to the YouTube? Yeah. So some people who are in the Discord sometimes get on the YouTube, but the Discord is better because, of course, you guys can talk to me. And also, there isn't any delay. We'll start in about 2 minutes. So this is similar to our weekly performance reviews, but more so for other groups that I support. So other Discord owners who want me to help their members, I have this free class for them. Mhm. My my explanation of the fib tool is going to be a little limited, so I can only really go over basics before I get into legal trouble. So Trust, I found him in 100K's group. So when did you join his group? When did you join 100K's group? Yeah, when? Like a year ago, 2 years ago? Oh, gotcha. Yeah. So when I joined 100K's group, it was like the administrators or the top traders in there. Brown, Trust My Levels, True to the Strat, Faith in the Strat. Maybe like one other person that I can't remember right now. But Trust My Levels taught me how to use fibs like the way he does. And he made everybody sign an NDA who got his course. So I am extremely limited on what I can say about fibs. I can only really speak on how I use it. and like kind of basics, but that's pretty much all I can really go over it. But yeah, we can definitely talk about it too. Speaking of which, hey, welcome, Philip from California. Hope you're enjoying the daytime. It's dark over here in the Florida side. Speaking of which, let's get started. So, welcome everybody. My name is Advent. I am not a financial advisor. Anything we go over in this class is not financial advice. So please do your research before you engage in trading. For those who are new to this class or series or what have you, pretty much where you can ask me anything trading related, so I can help improve your trading. Yeah. So whatever you want to go over, put it in the chat. I've traded it all, stocks, options, futures, crypto, forex, all that stuff. So whatever you want to go over, definitely let me know. I'm not limited in just speaking about like strategy and stuff like that. My main reason for this channel was for the trading psychology, but people were like, hey, teach us how to trade too. I'm like, all right, I guess I'll do that too. So anything at all, let me know. You can put it in the chat. For those in my group, you can let me know whatever you want as well, and we'll go over that. Let me bring up my chart. Let me know if you guys can see my screen. Mainly for those in the YouTube channel, because in the Discord, you should be able to see my screen as well. Sweet. Cool. So I guess we'll get started with fibs. And in the meantime, whatever you guys want to go over on the YouTube side, put it in the chat and we'll talk about it. Let me fix this real quick. Great question, Ali. We'll go over that after. Well, what I'll tell you right now is, first of all, you got to tell me what the SMI indicator is, because I don't use that at all. I have used MACD in the past, but if you give me more information on what the SMI is, then yeah, we can talk about that. But yeah, Mario, what specific questions did you have regarding fibs? Mm-hmm. Mm-hmm. Yep, right over here. Yep, yeah, pretty much like these 2 points there. Now, in the sense of what to do now that you have that drawn, it really depends what you're looking for, right? And like depending what your strategy is. Now, are you familiar with breaker blocks? Cool. So let's say for breaker blocks, what I've seen, breaker blocks, we're pretty much just catching the apps like near the top of the H crest, right? So let's say for the sake of the conversation, let me just redraw this. So right now, if let's say there was a order block over here, and I was trying to catch the breaker block retest of the 61 fib, I've used the 50 fib, but Omari told me that the 61 is better or more efficient, so that's what I use, which has been working fantastic. I love that setup. But anyway, what I'll be looking for is for price to come back and retest the 61 fib, and I'll just have a sell order just sitting there. And depending what I'm trading, my stop loss varies. For YM, I use a 40-point stop loss. For RTY, it'll be like a 4-point stop loss. ES, even though I maybe traded it once there, like a 3 or 4-point stop loss can be used. Sometimes you might reduce that depending, how big the range is. But essentially, I'm looking for price to come back, touch the 61, and then just die back down, basically making the H like all the way up here. Now, in this case that we have right over there, that didn't happen. Let me see if I could bring up one of my breaker block trades so I can show you an example. Just bring it in my journal real quick. February 18th on the 15-minute for YM. Whoops. And more than likely I had extended hours on because that's what I use to find the breakers. All right, that was on 18th. Yeah, it was on YM. It was definitely this one. So in this case, it already completed the H. However, I was still waiting for the 61 fib to get touched, which as we have right over here. So I drew it from this high to this low right over there. And then once price came back up and filled me at the 61 fib, I took some profit off at the 50 fib, and then I'll pretty much just aim. So that the trade looked like this. Let me just put it here on the chart. Oh, whoops, this is NQ. Whoops. I'm like, why are the points? Yeah, I'm like, why are the points looking so weird? All right, this makes a lot more sense. There we go. All right. That looks a lot more like it. So I have my sell here. My stop loss was at 40 points. And I'm pretty much aiming for this low. So pretty much like for the H to complete. So for this specific one, I got in at the 61 right over here. I took some profit off at the 50 fib, and then I moved my stop loss to slightly above break even. And then I just start aiming for the next fib level, which is the 382 right over here. And then I aim for this low for the last, part of the contracts that I have. So I'm pretty much just front running the H, the high of the H with the breaker. At least that's how I kind of make it make sense in my head. I don't really study ICT. It just kind of makes sense to me, like the way, the candle setup and the patterns and all that good stuff. That's how I kind of recognize it. I can't really explain to you like breaker blocks in ICT terms, but just like visually, this is like the best that I can explain them and how I take them. But yeah, this is like an example of how I would use fibs. Also, let's say, I think for the W retracement, that will be like a breaker block, but on the long side, at least for people who have told me anyway. So once we get our W, right, and then it completes and then it comes back and generally comes back to retest the center area and then goes back up. What I want to do is I'll get my fib tool, draw from this low to this high. And if the 50 fib matches up with the center, then I'll put a buy order sitting there. And then you could put your stop loss under the fibs or even under the bottom right of the W if you want. It really depends on the stop loss. I really don't want it to go more than like 40 points as my stop. So you can do 40 points at the minimum and you can increase that if your risk tolerance is there. I usually just keep it fixed at 40 points. However, in this case, people or ICT people, same thing as the short breaker block that I showed you. For this specific one, they prefer the 62 or the 61 fib. So you can have either one, like whichever one of these two fibs match up with the center, I'll just put a buy there. And you have the option of, like I mentioned, targeting the next fib levels. You can also target whatever level is up here. For those who trade the strat, you can look at it as like a TTO. You get the pullback, and then you're aiming for that high to be taken out. If it's a valid one, it is going to break this high over here. But if I get in here and I'm up 60 points, I'm not going to let 60, 70 points go red on YM. I'm going to take something off as it goes in my favor. So those could be some examples on how I would use fibs. Of course. The last thing I'll probably mention about it is like for the strat, if you're using a stop loss, so I'll say like, 50% of the previous candle, you could just draw your fib to get the exact level that may be. All right. Let's see. Is the 0.6 level on the fib the most important? Depends who you ask. So for my fib levels, I have these areas marked in yellow just because when I was studying the Candlestick Bible a million years ago, they said like the 61 to the 7-8 area is like the golden zone, if I recall correctly, which are like the stronger levels. I think the 70 is the strongest level, or the 61, I forget. But anyway, that's like the golden area. So like the strongest fib levels are these two. The 50 fib level is also very strong. So pretty much these three here would be the strongest ones that I've seen, the 50 to the 70. So you can look into that, Ali. And Ali, in the sense of yeah, so the fib is drawn from a high and low point. Again, it really depends on what you're looking for and what you're trying to do. Like in this huge drop over here, you can just get this high. Oh, whoops, wrong tool. You can draw from this high all the way to this low if you wanted to. And then depending whatever your strategy is, you can have either sell orders sitting here or buy orders, whatever it may be. It really depends on what you're doing. But let's say you wanted to catch a short 50% of this big move. Once you get your fib levels plotted, just put a sell order and then it'll come and fill you. And in this case, obviously this is hindsight 2020, but that would have been a great short off the 50 fib, right back down, which would have been absolutely lovely. Nice W there too. But yeah, you can draw your fibs from swing highs to swing lows, lows to highs. You can do it from a single candle as well if you want to. Again, it really just depends on what you're trying to do with them. There's a million. You can use them as support and resistance. So let's say if you're on the daily time frame, let's turn off these BF so people don't get aneurysms. So let's say on Friday, there's my fib level for Friday. So you can, you can come and have a short at the 50 or the 61 and see if something happens. Or let's say if you're looking to take a short to the downside, you could use the 50% level of the previous day as your stop loss. You could do a million things with the fib level. So pretty much whatever you want to do. Do I trade SPY? Negative. I trade the Dow Jones and Russell. So IWM, DIA, YM, RTY, and the micros of those for futures and options. Also, just realized, let me check something. We have 9 people on YouTube and only 3 likes. I'm going to need you guys to get those likes up. I just need 50% participation. Hit the little thumbs up button or the little like button. Why do you prefer the Dow and IWM? That is a fantastic question, Philip. So for me, the Dow, it's a lot, well, it depends who you ask, but for me, the Dow is a lot more relaxed compared to SPY and QQQ or tech. I used to trade tech until 2023 when I discovered the Dow. And then I'm like, wow, this is a lot more relaxed, especially for futures where you'll still get fast movement, but the pullbacks or for those who trade NQ, you'll understand what I'm saying. But those pullbacks or when those wicks come and get you, it can be very detrimental to your portfolio or to your trade. So, I can stomach a 50-point pullback on YM. That's like $250. But a 25-point pullback on NQ, that's $500. So, in that aspect, that's one thing on what I prefer. Tech is super volatile, which I can see why people gravitate towards it. I just personally don't care too much for it anymore. For Russell or RTY, like IWM, things like that, it's a lot less volatile than the others. So if you want to have a pretty relaxing time, you can trade Russell. And those tickers for futures are RTY, M2K. For options, it's IWM. Now, it does move a lot slower. So Russell moves the slowest out of all of them. For me, YM or the Dow is like a nice little balance between being quick and also not being as volatile as the NASDAQ. So those are some things on why I prefer it. For breaker blocks, how would you know if it's going to bounce off the supply area? That's a great question. I definitely don't. I just draw my fib, I put my sell order. I mainly take them on the short side. I haven't really taken any on the long side. But the question is, I don't know. Just based on the data that I've seen, and it usually rejects off the 61 a lot more than it doesn't. And that's pretty much all I go based off of. And even if you want to go, let's go back here. Where's the 18th? Even if you want to go into, let's say, not using the term supply area, I like to look at it in this way. We have all these buyers that are hanging out in this area, right? Where all these lines are drawn, whoever went long in those areas. Now, when we get this gigantic displacement candle right over here, we have this huge solid candle that basically broke through this entire level, meaning whatever buyers were there did not have any strength to hold that area. So the way I see it is whatever buyers were hanging out here, they got obliterated or displaced, as the name suggests, with the displacement candle, right? So because this candle happened right over here, I can imagine that there's no more buyers in that area. There's sellers now that got left behind on this big candle to the downside. So using the fibs is basically just to get an accurate level on when to get into the trade. Because, do I want to short over here? Do I want to short like above these candles? Do I want to short like in this fair value gap? Do I want to short it up here, over here, right? The fibs are just giving me like an accurate level on where I can short it. And like I mentioned, based on the back testing and forward testing in the data, the 61 area and even the 50 and 70 tend to be very good sell areas to have an order sitting. Hopefully that answered your question. Cool. What other questions do you guys have? Do you like to play EMA bounces? I do not. I don't use EMAs. The way you see my chart, that's how I trade. I stopped using EMAs like 3 years ago once I discovered the strat. So all I use when I'm trading is fibs, the strat, broader informations, and that's pretty much it. Candle patterns, I guess, and chart patterns, but the way you see my chart, that's how I trade. I find EMAs confusing in the sense that depending what I'm looking at, they can give me ideas counter to what I'm looking for. So if I'm looking for, let's say if one indicator saying go long, the EMAs might say go short and all this other stuff. I don't really care for it. It just causes more confusion for me. If you make money off it, hey, definitely keep on using it. I just don't prefer it. So you draw your fib on the setup time frame or the lower ones. Rio, I draw my fibs on the time frame that I'm looking to take the setup on. But yeah, I don't use EMAs at all. I'm super biased against them once I discovered the strat, which is price action, which is what the EMAs are following anyway. It's like, why not just be price action? Just makes more sense. It's like when people ask me on what they should invest in, I'm like, one, I'm not an advisor, so I can't tell you what to invest in, but I like to keep my investment simple. If you don't want to think too much about it, I like the S&P 500. People always try to beat the S&P 500, so why not just be the S&P 500? I'm not trying to think too much with my investments. That all my brain power goes into trading. Not really real. It depends on what I'm trading. I would use the fibs on the 4 hour to look for like targets and things like that, but it really depends on what I'm looking for. Is a setup more accurate on a higher time frame? Great question. It can be. I wouldn't necessarily say accurate. It's more so, you know, the way I can answer that is depending on your data, right? What does the data tell you? Which specific time frame works better for it? Like for example, for my W setup, I usually look for it on the 5 and the 15-minute time frame. It appears on all the other time frames that those are just the ones for day trading that I've had the most success with. Anything under the 5 minute when it comes to the W, and you'll see them print on like the 2 minute, 3 minute, things like that, even the 1 minute, just the probability of it working out in my favor is a lot better on the 5 and 15 minute. So I can't necessarily say blanket statement yes or no. It's more so situational to whatever it is that you're looking at or what you're looking for. There'll be times where I saw a nice bullish setup on the 1 hour, but then the daily looks bearish. Well, yeah, again, you know, when it comes to, well, if you're swing trading, I don't use I don't use anything under the 4 hour if I'm swing trading. Because to me, the 1 hour is a day trading time frame in my experience and in my opinion. If I'm day trading and there's a good setup on the 1 hour and the daily's bearish, I'm probably still going to take that setup if it's one of my setups. Of course. How many setups do you have on average? So I can be more clear on your question. Are you asking me how many trades on average I take a day or how many setups I have? Setups wise, I will tell you right now. All right, so there's the TTO setups, the W setup, the kid and play model, breaker blocks that I incorporate now. Oh, duh, I have my template right over here. All right, so I have the W, the TTO, broadening formation reversals, the kid and play model, 15-minute orb setup, Momo Hammer shooter setup, and the 4-hour setups when I'm day trading. The W retracement model and the tweezer model. Let me actually share my screen so you guys can see this. Whoops, wrong button. It might be a little tiny to see. I'll try to see if I can make it bigger. Oh yeah, that's too small. Let's try this. There's 1,000 of me. For those in the Discord, you already know these, so I'm not gonna share the screen. But for those in the YouTube, these are pretty much my setups. I have them categorized in reversals, continuations, and ones that I use for fibs and ICT. So these are the setups that I use, and they're all labeled B and A or B, depending on their profitability and how well they work. Is that this broadening formation, the speaker phone pattern? Yeah, it's the megaphone pattern. You also know broadening formations by the megaphone pattern. So basically something like this. And then you just get price that bounces in between those levels and stuff. But in strat terms, we call them broadening formations. Yeah, BF setups are definitely great, especially for swing trading. That's basically the only way I swing trade. W setups, gotta love them. I wish they would show some more though. Can't see my screen. That's weird. That's so weird. There we go. All right. Cool. Yeah, W setup, Joey. Love when those print. They haven't been printing that often. I don't think I took any this month. Maybe like one. Yeah, it took one W setup this past week, which was a loser. They've been printing dirty ones with the lower lows, but I don't really like those. So there's 2, 3. I took 4 this month, only 4 W's. Could you show us the one you took a loss on and what you wish you saw beforehand? I think that was on Thursday. I'll tell you right now. Yeah, this was a poor one in that I shouldn't have taken at all. Right over here. Even though we did get the higher low, my mistake was I generally don't take W's when they have wicks like this in the middle because showing selling pressure. So when I got back on my screen, I missed the bearish TTO right over here, which was lovely. But this is the one that I lost on. This wasn't the best ones. I should have avoided that one. Do you have videos that cover some of these setups? I know you have the TTO and broader information setups. Ali, if you go into my YouTube channel and you go to the playbook setup channel or the playbook setup playlist, it has the Momo Hammer, the W, the TTO, and I think the broader information ones might be in there, but it'll have those in there. I did have a class. Yeah, that H pattern was super clean right off with a bearish TTO too. I mean, with a shooter candle too. The link that I put in the chat is a playbook masterclass that I had. Basically goes over all my other setups and those setups that we were talking about in excruciating detail with a lot of data. Yeah, YouTube does ads midstream, but I think I turned it off, at least for this one. I know the other ones that I've always had the ads playing, but because people kept on like asking me questions and then an ad will come up and they won't hear me respond to them, it kind of messed up the dynamic. So I turned them off for this one. Looks like YouTube still sends ads anyway. Probably not as often though. Interesting. I turned it off for this class. I guess they still send it then. When your BF and your fib line up, would that be considered an A setup, like more confluence? Not. I want to say yes, real, but not really, because when I'm looking at specific setups, I don't necessarily like if I'm looking at a breaker block, I'm not going to be like, cool, there's a broader information here. This is an A setup. A breaker block is already an A setup for me. So if there is a broader information at that level, sure, it'll just add more confluence to the trade. But it wouldn't make or break the trade for me where I would avoid it if there is or isn't a broader information there. Sweet. Are daily broader informations confidence inducing for you enough to enter a trade with a signal? Definitely. If there's like a reversal set up there, like a 2-1 or, a shooter or what have you, or hammer, I'll get into that trade. Even if it's a weekly BF, doesn't matter to me. Like even on this trade we have over here on the chart, we have this nice shooter. I wouldn't have taken this one. I wouldn't have taken this TTO because I don't like taking triggers at broadening formations in case we get like a bounce up on that area. But this one right over here, I would definitely take because we have a nice shooter that's closing under the BF level. And then I'm just taking that short to the downside. So I would take this one over this one. So if there's ever like a trigger, let's see if I can find another example. So like this right here, right? Let's say this 2-2. If I want to take this to the downside, I wouldn't take it because the BF is basically right at the trigger point. I would avoid that personally. I've lost them a lot more than I would have hoped to doing that. So I avoid taking trades when they're right at BF levels. Cool. What other questions do you guys have? And welcome for those who are coming in. If you haven't been here before, you can ask me whatever you want so I can help you improve in your trading. Anything goes, strategy wise, psychology wise, any issues you're having. It's all welcome. There's no judgment here. What are broadening formation levels? Broadening formation levels are support and resistance for strat users. If you're not sure what that is, you can go on the YouTube channel, well, this YouTube channel, and go to the playlist section and go to the strat playlist. And there will be an entire section going over broadening formations. I think it was like an hour, like 30 minutes to an hour long for that class. So it'll be in there. How do you find your daily levels? What do you mean exactly by how do I find my daily levels? Like how do I get my daily high and lows, or what specifically? Shout out Randy Howell. He was my trading psychology mentor in 2023. Great guy. Helped me a ton. Highly recommend checking out his YouTube channel. Really good stuff. Do you have any thoughts on if the market will continue selling off? Ignore if not appropriate. Any questions are accepted, Jed. You're good. So I'll answer Ali's question first, and then I'll go to yours, Jed. Ali, are you familiar with the strategy? Or maybe it's ally. Whoops. Let me know if it's Ali or if it's ally. I've definitely been looking at that wrong. Let's see. Let's go to the daily. All right. So if you're familiar with the strat, I'm just a little confused on the question. Maybe I'm just thinking too much into it. Like, how do I get my levels for the daily? I don't really know what that really means. Because if I'm taking, let's say, a 2-1-2 bullish reversal on the strat, your targets are just the previous highs, whether that's the body or the wick. Or like earlier, you can also use fib levels for additional targets if you want. You could do that. Or if you have broadening formations, you can use that as targets as well. So either one of those three you can use for your targets. I don't really look at levels for the day. I'll throw on some fibs and see what the fibs are doing, but I don't really have levels for the day per se. At least that's not really part of my routine. I'll mark off like the 4-hour high and low. Other than that, I just look at the BF levels and stuff like that. And extremely rarely I'll throw on fibs, but that's more so for specific setups. I won't just throw them on just to throw them on. Let's see. Do I have thoughts if the market continues going down? I try not to be biased. We are bearish finally with the market in the sense that I kind of just pay attention to what the weekly time frame is doing, and the weekly time frame reversed to the downside last week. So I am short-term bearish on the market. We do have some news this week that can potentially bring the market down further. Let's bring up news for this week. So we have consumer confidence tomorrow or on Tuesday at 10 a.m. We have GDP data on Thursday and unemployment claims at 8:30 in the morning. And we have PCE data on Friday. So those can potentially take the market down more, or they can bring it back up. We'll see. Maybe not by too much, but I am definitely short-term bearish on the market. And yeah, and NVIDIA earnings this week, which is Wednesday after the market closes. So NVIDIA, if those earnings are bad, I hope you guys have some puts. Also, I do not encourage trading earnings. To me, that is gambling, especially with options. Also, fun fact, for those who like trading earnings with options, you can just trade it with futures and you can exit the position whenever you want. And you don't need to worry about theta or IV crush. Again, not that I encourage trading earnings, but if you are going to trade earnings, in my opinion, there are many more efficient ways to do so, especially with futures, where you don't have to worry about theta and IV crush killing your contract. Hey, my pleasure, Jed. If you're not in my group, you're available to join. Give a 7-day free trial. See if you like it. Stick around. Is futures less or more riskier than options? Well, futures, you use margin. So technically, yes, it is more risky because your account can go negative, but it is highly unlikely that your account will go negative because if you don't have the margin requirements if you don't have the margin requirements to even have the position open, then they're not going to let you keep the trade open, right? So the broker is going to liquidate your position and close you out before you even go negative, because if you owe them, that's a problem for them. Granted, you could probably go to collections or your credit gets messed up, but it is very unlikely unless like some crazy thing happens where you go negative in the account. Is it more or less risky in the terms of like losing money? To me, you can lose money with anything as long as you have a solid level of risk management. There really isn't an issue in my opinion. So, because I know people in futures who have proper risk management and they do fine. I know people in options who have poor risk management and they've blown multiple accounts. So it's really dependent on the person. As long as you have a stop loss and you have proper risk management, you'll be fine. You just have to learn the way futures work in the sense that it's not really like there's no theta and things like that, right? It's like if you've traded regular stock, it's similar, or forex, like you're going long or short. You just need to know the tick value and things like that. Speaking of tick value and stuff, Alec asked, do you have a copy of the YM RTY futures contracts dollar amount? Well, Alec, you're asking like two questions in one. If you go to the futures guide in the educational center in the Discord, there's going to be one that says margin requirements, and it'll bring up the margin needed for futures on Tradeovate. If you're talking about prop firms and the 5 contract limit, that means that you can have 5 mini contracts open at any given time, or 50 micro contracts as your max position size. Will I take an entry on the 4-hour if there's a signal at a broadening formation? Do you mean if there's like a strat trigger at a broadening formation, or if the BF is at, or if the trigger is at a BF level? Five mini contracts is crazy depending on your account size. The maximum that I personally use is like 2 minis, and that's if my loss is less than $500. Yeah, 5 micros is pretty chill. It also depends on the setup, right? Like sometimes if I may want to use 2 minis, I might actually use 15 micros if it's within my risk tolerance, just so I can scale the position more. Because let's say if I were to use 2 minis and the loss would be 550, which is over what I want to lose. If I use, let's say, 15 micros, that can keep me, let's say, 470 loss, which I'm okay with. So to me, it's kind of situational on the amount that I'll use. But for the most part, I'm usually using 10 or 15 micros or 1 or 2 minis. Usually for the orb, I'm using 2 minis, sometimes 1, depending how the market's looking. Yeah, if there's a trigger at a 4-hour, at a BF, I won't take it. I will skip that one. New to futures. Ooh, the market's open. We can definitely paper trade futures. Great question, Ryan. Let's bring up just regular micro YM. All right, so let's turn on extended hours and let's go on the 5 minutes. Where's my clock? That was weird. All right, let's say that I am short and I want to sell 5 contracts. And then my stop loss, let's say, is here. And my take profit, let's say, is down here. So if I get into this trade, I have 5 micro contracts. So let's say if I want to sell 2 at this candle's low over here, I can just put the opposite order. So then when price comes down, it'll take 2 contracts off of my 3. And you can scale out of your position that way. You can think of it like option contracts. If you have 2 contracts, you can sell 1, you can keep one of the other ones. If you have 5, 10, whatever, doesn't really matter. I haven't been keeping track of hymns like that. I did see that they got obliterated on Friday as well as United Health. I'm pretty sure it'll affect their intake because if they can't really advertise as much anymore, then that's definitely going to affect their revenue. I don't pay too much attention to fundamentals when I'm trading. I mainly look at the chart. I'll look at fundamentals more like as a additional confluence, but they're never really the basis of my trades. Are my setups different with futures and options? Nope. Funny enough, I trade futures how I trade options because I used to trade futures using fibs on how Trust My Levels taught me. But because I can't teach that because I'm signed to an NDA, unless you guys want to pay for my lawyer fees, let me know. But yeah, people are like, hey, teach me how to trade futures. I'm like, I can't. I can't teach you because I had to sign an NDA for the strategy. So I'm like, all right, if I'm going to teach people, let me start trading the strat the way I trade on options for futures. And that's pretty much what I do now. So I trade options. Well, I trade futures the same way I do options. You just have to be a little more picky on your setups because, depending what the setup may be on futures, you may lose a lot more than it is on options. I just prefer trading futures at this point compared to options because there's no theta and no expiration dates per se. It's just a lot more relaxed. Like, for example, in the trade that I just placed earlier, if I set the take profit and stop loss, I could have just walked away and go do something else. Whereas for options, if it's chopping around all day, theta is going to kill the contract premium. Where on futures, it can stay where it's at all day, right? So let's market buy contracts. So if I'm long 2 contracts and my stop loss is, let's say, down here, and my take profit, let's say, is up here, price can chop around all at once all day, and it won't lose me money just because it's chopping around. As long as it doesn't hit my take profit or stop loss, I'm in the trade. I'm chilling. So, and my opinion, if you trade options on like SPX or QQQ, SPY, IWM, in my opinion, it's more efficient to just trade the futures because you're trading the exact same chart and there's no theta. And you can make your own delta. So 100%. We were talking what, like a month ago, like I think 3 weeks to a month ago. You were like, yeah, yep. Yeah, exactly. Can I go over the 15-minute orb setup on futures? Pretty straightforward. I'll go over the W, not the 15-minute though. Is there no upside to trading zero DTE SPY rather than futures? It, to me, it doesn't make sense. Sure, it's like technically less money for zero DTE, but for what, right? One, you're trading zero DTE, so theta is going to ramp up crazy when you can just trade a micro contract for futures on MES, trading the exact same chart with no theta. I personally avoid trading zero DTEs on options as well, unless it's Friday. Other than that, if it's an index, if I were to even trade them, it'll be a 1 to 3 DTE. I don't trade zeros on indexes or indices at all. I'll trade zeros on Tesla on Friday, but other than that, I am not touching those on indices. Okay, let's go over that W. February 10 on YM. This was a failed W that didn't complete, but I'll show it. So got the move down from market open, got the retracement back up, got the pullback with a higher low, and I went long. My stop loss was under here. Max target was high of day. Well, really this body over here. And my first target was this body right there. So got 20 points, pretty much $100 on that trade right over here. And then it reversed and got me out of break even. Generally, you can use the absolute center, but when I see wicks like that, I usually use the body near the center area. So that'll be target 1 and target 2. And then there was another one. What was the other one that I took? This one isn't the cleanest W just because the left side is kind of just like a straight move down. This is market open right here on the 5-minute. Once we got that higher low, I went long. First target I had at this wick right over here. Second target would be this high, which it eventually hit, But this candle right here stopped me out at break even. So I left with about, what's that? $270 on that trade. It ended up hitting the second target later on, but I didn't stay on for that long. A cleaner W will look something like this. So we get the move down from market open, makes a little retracement back up. This one made a lower low. This one I did not take. One of my students made fun of me because he's like, "Come on, man, just take the lower low." I'm like, "Nah, I can't. It's not part of my playbook." He took this one and he did pretty well on it. But if I were to take this one, pretty straightforward. First target is the center. I'll probably use this body as the completed W, but you can also use the wick. I just prefer not to if there's like selling pressure there. So the trade would look like this for me. I go long as soon as the first bullish candle goes to the upside. This one would have stopped me out though, because this went 2 up, then 3 down. However, you could have re-entered on the 3-1-2 up right here. First target, stop out under the 3. Second target was what? 163 points. I would have been super done for 2 days if I got that. Would have been $1,000 trade right there. I look for it on the 5 and the 15-minute alley. Do you ever trade natural gas? I never trade natural gas. I only trade the Dow and Russell. I used to trade just oil, but that's a long time ago. I haven't traded it in a while. Somebody was telling me to look at gold, but I don't really like trading. I'm sleeping during London, so, and I'd rather not trade during Asia because I want to enjoy my day. All right. I will take one more question and then we will wrap up. So give me a last question and then we'll go over what everybody's biggest takeaway was and we'll go about our Sunday. Yeah, gold is definitely super bullish from what I saw. Ali, you can use the wick or the body. It's really up to your discretion. $163. That's what, 253. That is $815 on the second contract. So this trade would have made me easily $1,000 with 2 YM contracts, which is what I usually use for these. I'm not going to sacrifice $800 and change just to make an additional, what, $200? I'm good. I'm taking my money and I'm going about my day. Does this system work on all stocks? What system? Like the Strat or the W or what? Well, the Strat is price action. So whatever has a chart, you can trade it. You just have to be very specific on how you take those setups. For example, you don't want to take any setup. You want to really, like for me, I use it in relation to models, right? So with the W, I'm using the Strat to enter those trades. But I'm not going to take any 2-1-2 or 3-1-2 or whatever. It's not really efficient. especially for futures. Of course. Cool. Before we wrap up, what was everybody's biggest takeaway, or what was the biggest thing that you learned today? I was waiting for you to appear, Kev. I was waiting for you to appear. Hope you enjoy that vacation money for me. Louis V's a student who made fun of me for not taking the trade. He's like, come on, bro, just do it. I'm like, nah, I'm good. You enjoy it for me. Hey, of course, Alec. Any other takeaways before we wrap up? Also, for those who are not in my group and may want to be in my group, if you go on the YouTube channel and you click on the biography, I think it is, or the bio section, there's a link on where you can join the group. We give a 7-day free trial. You can try us out, see if you like it. If not, we will never speak again, and you can go about your way. We live trade every Tuesdays and Fridays, and we have more of these classes throughout the week in the group. I guess no takeaways for the YouTube folk. Everybody's an expert after today. I better see a bunch of wins. Yeah, update me on all your progress. Also, question for you guys. I usually do these classes on my MacBook. Do you guys prefer this setup? Because I'd imagine this mic sounds a lot better than my microphone on my laptop. Hey, it doesn't matter to me. My laptop is right next to me, so whatever would give you guys better quality. Cool. Yeah, I was watching a bunch of Alex Hormozy videos, and he's like, the best thing to do is just ask your audience for feedback and what they like, so you can do more of that. You didn't notice the difference? Interesting. Yeah, Alex Hormozy is a freaking beast. I've been binging his videos for the last like 7, 8 months. Definitely a great dude. Highly recommend his YouTube channel, especially if you're a business owner. Definitely good info. He actually helped me with my business. Not that I work with him directly, but just off his like content, because he would like ask business people like, hey, do you have this data? What do people like? What do people don't like? How many people are doing this? How many people are doing that? And I'm like, I need to collect a lot more data, which makes a ton of sense because I'm like, that's the same thing that I do for you guys when it comes to journaling, right? When I ask people if they journal when they trade, they're like, yeah, kind of. I'm like, what does kind of mean? They're like, oh, like if I won, how much money I made. And then I'll ask them, like, hey, when do you make the most money? Or what's your best ticker? What's your worst ticker? Things like that. And they'll be like, I don't know. I'm like, you might want to start collecting all of that data. What are your best time frames, right? What are your best setups? All important pieces of information. Cool. Well, if there aren't any other takeaways, we'll wrap up. One last thing for those who are new here, for the Let's Learn with Advent series that we have today, we have these every third Sunday of the month, except this month, which is on the fourth Sunday. But generally, every third Sunday at 7 p.m. Eastern Time is when we have these. So you can put that on your calendar. We'll have them live on the YouTube. For those in the Discord, of course, I'm going to be in the Discord channel. But yeah, for those who want to attend more of these, you're definitely welcome to. I also have my free group coaching session similar to this, but we have it on Zoom every second Sunday of the month at 8 p.m. Eastern Time, which if you go to the, let me actually bring up my screen so we can see it together. So when you're on the YouTube channel, if you go to where it says like right over here, click on more, it'll give you all my links. If you go to trading resources, that'll pretty much give you all of my links. So there's my Discord group, my mentors Discord group. I actually have to update this because it is not lifetime access anymore unless you pay for that. Trader Circle, free group coaching. You can click on that link and it'll give you the time to schedule. The next one is March 9th. So you click on the time, put in your name and what you want to go over, so on and so forth, and we'll talk about it. Other than that, I will see you guys on the internet. Have a good night.